Hi, this is Alex Perini from Summerhill Financial Services, just with another quick update. Now, further to Caroline's update last week, in these times of increased volatility and uncertainty, there is no downplaying the anxiety that understandably comes with it. During these periods, we understand it can be hard to stay focused on your long-term goals, particularly when it seems like everything's in a bit of chaos. But we just want to reiterate that these are the times when it's most important to stay focused and disciplined on your long-term goals, your investment strategy, and things that you can control rather than what is happening in a relatively short time frame. Undoubtedly, we'll continue to experience more uncertainty and volatility in markets as events unfold and markets process new information that's being released, but this will pass. Focusing on your goals, what you're actually investing for, and what you're trying to achieve with the money you have will help reduce the potential of making decisions based on emotion and short-term uncertainty. Now, I attended an investment forum today with a group of asset consultants and investment professionals from around Australia, and it is the common belief that markets have overreacted and that if you are investing for the next 5-10 years plus, most markets are cheap at present, particularly when compared to cash and interest rates, and when also taking into account things like dividends on Australian shares, which are currently on the higher range of around 6% and tend to be far less volatile than the actual share price. We also want to remind you that for many of you, your portfolios are not only invested in shares. The portfolios have an allocation to cash, bonds, and in more recent times, term deposits. So just because the news headlines are saying share markets have reduced by a certain amount, doesn't necessarily mean that the portfolios have, because of this inclusion of the term deposits and bonds. Now, these types of investments generally are not sexy, particularly when markets are increasing. But in times when share markets are pulling back or acting irrationally is when bonds can become extremely useful in helping reduce that volatility in the portfolio. Now, as always, but especially during these uncertain times, we welcome any feedback or queries that you may have. Thanks for listening.